Hello everybody, today we gonna learn this two very important words, debits and credits, which we use in specialized ways in accounting system to describe financial information. Now let's start back with the old balance sheet that we talked about. You remember assets on the left side, liabilities, and equity on the right side. And you also remember that the total of the assets is always equal to the total of the liabilities and equity. Now when the accounting system was evolving, what they did was, they decided to call the left side debits, so assets are debits, if you get an asset that's a debit. And the right side they decided to call it credits, so if you get liabilities and equity that's a credit. Now that's easy to remember. Let's take it one step further. When an asset goes up, we gonna call that a debit. And when liability and equity goes up, we gonna call that a credit. Okay, let's take another step further now. When an asset goes down, we gonna call that the opposite of debit, which is what? That's a credit. And similarly, when liability and equity goes down, we gonna call that the opposite of credit, which is a debit. So, that is the basic rules for debits and credits. Easy to remember, right? Let me talk about revenues. Now remember, revenues is when you make earnings by selling goods or services. Now, when you make revenues, when you earn revenues, how does that affect your equity? Equity goes up. Now, when equity goes up, what do we have? Credits. Okay, just remember, revenues are always credits. Now, let's talk about expenses. Expenses are the cost you incurred when doing business. How do expenses affect equity? They make it go down. So when equity goes down, we call that a debit. So expenses are always debits, just keep that in mind. Now next, let's employ this terminology and see how we use it in analyzing financial transactions. We have a ledger, which is a record of all our accounts, and we have a various accounts. Now, we gonna use a tool called a T account, and it's a simplified version of the way we keep records in a real general ledger. It works like this. For each account, we gonna put the debit on the left hand side and credit on the right hand side. Simple as that. So let's take an example. Let's say I go to the bank and I borrow 3,000 rands. They give me the 3,000 and I deposit it into the company's bank account. My business now has asset cash of 3,000. Now assets are debits, so I'm gonna record that 3,000 on the left hand side. I'm just gonna say debit cash 3,000 rands. That's how we say it in accounting. Now they didn't just give me that money for free, I had to sign a note. That's a legal document, right? That's a liability note payable. Now liabilities are credits, right? So, I'm gonna record this 3,000 liability on the right side of the note payable T account. Credit note payable for 3,000 rands. Now let's say, some clients come in, I do the cash returns. I provide the work for them and I hand them the invoice saying you can pay me later. And let's say I do a total of 5,000 rands with the business. I have earned 5,000 rands of revenues. Now remember, revenues are credits always. So let's record those revenues. Credit revenues 5,000 rands, so I am gonna record it on the right hand side. Remember, credits on the right. Now I haven't received cash yet from my customers. But I have received another kind of asset, and that's what we call account or income receivables. Amounts that are owed to you by your customers. That is an asset. When asset goes up, that's a debit. So, I am going to record a debit of 5,000 rands on the left-hand side of income receivable account. Now let's say the next day for some reason, I decide that I would like to pay down the balance that I owe to the bank. I make a partial payment. I am gonna pay them 1,000 rand to reduce the amount that I owe. My cash is gonna go down. When an asset goes down, that's a credit. So I am gonna credit cash for 1,000 rand, on the right hand side. And now, how does this affect the note payables? They going down. When liability goes down, that's a debit. So I am going to debit note payables for 1,000 rand, on the left hand side. Okay, let's say the next day, I get a payment from one of my customers of 2,000 rand. I deposit it into the company's bank account. So the company's cash account goes up. When an asset goes up, that's a debit. I am gonna debit cash for 2,000 rands, on the left hand side. Now what other accounts are affected? My account receivables is going to be reduced because I collected some of that. When an asset goes down, that's a credit. I am gonna credit account receivable for 2,000 rands, on the right hand side. Now let's say it's the end of the month, we gonna close the books. What does that mean? It means we gonna calculate the ending balances of each account. Let's see how it works from the T account. Let's look at cash. Now we gonna take the total of the debits and the total of the credits and we gonna net them together. So if I have a 5,000 of debits and 1,000 of credits, that leaves me with a net debits balance of 4,000. So because it's a debit balance, I am gonna show it on the left hand side, a debit balance of 4,000. Let's go to account receivables. I have a debit of 5,000 and credit of 2,000. When I net them together, what I get is a net debit balance of 3,000. So because it's a debit balance, I am gonna record it on the left hand side. A debit balance of 3,000. Let's go to note payables. I have a debit of 1,000 and credit of 3,000. When I net them together, I get a net credit balance of 2,000. Because it's a credit balance, I am gonna record it on the right hand side. A credit balance of 2,000. And revenues is that simple. Revenues are always credits. So I have a credit balance of 5,000. Because it's a credit balance, I am gonna record it on the right hand side. A credit balance of 5,000. Now let's take a look what happens at the end of the month if we add up all of our debits. We get 7,000 of the debits. What if we add up all of our credits? We get 7,000 of the credits. Now here is the key takeaway for today. For each and every transaction, the total credits will always be equal to the total debits. And within our accounting system as a whole at every moment in time, the total debits will always equal to the total credits. Now that you have learned how we use these terms in accounting, let's get ready to use these terms to describe financial information. See you next time.